overall, from what we've seen and heard from the European earnings season so far, does this back up the view that Europe is finally dragging itself out of recession?
I think slowly, and again, I think it's rather bumping along the bottom. What we're essentially seeing is consumer durables companies seem to be lagging behind. Very little consumer spending, as we saw from Unilever. Emerging markets were soft, but Europe wasn't brilliant. And we had the same news, of course, from McDonald's in the United States. The consumer has relatively little money to spend. Companies focused on the consumer are having a tough time. Meanwhile, we are still seeing very strong earnings from the banking sector, which after 5 years of essentially the morass has recapitalized itself in most cases and is continuing to really earn money out from volatility.
OK, we'll come back to the Eurozone in a second, but the big data focus today is in the UK, second quarter GDP, the first G7 to release Q2 GDP. Is Britain finally starting to pick up rather than just flatline?
Well, it's certainly going to pick up, and indeed we think there's a decent chance that the UK could be the fastest growing economy in the G7 in the second quarter. We're looking for 0.6% growth, possibly with a little bit of upside risk because ONS only has 40% of the data when they do give us this advanced estimate. But certainly it's an acceleration from the 0.3 that we saw in the first quarter. And in reality, sort of the first two positive quarters in a row, not distorted by the Olympics or the Diamond Jubilee, really since 2011. So I think signs there the UK is picking up. However, we would question how much of this is really being run by repayments from PPI, from the banking sector, which we believe so far has been the equivalent of a 3.5p tax cut of the standard rate of tax. Therefore, consumption will be boosting growth. How long will it last in the second half of the year?
OK. Well, I've also got the German IFO index. And if yesterday's German PMI is any guide, then we're in for another bumper number.
Indeed, we look at sort of consensus before the PMIs we'll see a little increase in current business conditions, a slight decrease in expectations. PMI looks to have blown that out of the water. I think what we're now expecting to see are some much stronger data. The IFO tends to be less volatile than the ZEW. German businesses are slightly more sanguine about their prospects, but I think we now have to see some very strong numbers, otherwise the market will be disappointed.
And more good news. I mean, it's been a morning of good news so far, it seems. Spanish unemployment out a short while ago, and it fell in the second quarter for the first time in 2 years, and the biggest decline in unemployment since 2005.
Well, of course, declines in unemployment could tell you that people have decided to exit the labour market because they fear there is no prospect of having work, or they're entering education, or indeed have simply left the country. And we have seen an increase in Spanish migrant labour moving abroad. But the Bank of Spain did tell us that in Q2 they thought that the economy only shrank by 0.1%. So there are signs that in the periphery, after all of the austerity which was front-loaded, perhaps they're now bumping along the bottom. But obviously the concern for Spain and Portugal is we'll see net migrant outflows to Latin America, to faster growing bits of the world, and that's how they're reducing the unemployment rate.